Good morning and happy Tuesday. This is Julia Garriott, your mortgage gal. So today I'd like to share with you what happens when an appraisal comes in low. So this doesn't happen all the time, but it is relevant, especially in a market where we have low inventory and you have multiple buyers bidding on the same property, often above asking price. So let's say, for example, the sales price is $500,000. And if you have a buyer that's putting a minimal down payment down, the bank is going to require an appraisal to make sure that that property is worth what it's selling for, so that it's worth the $500,000. Well, if the appraiser goes out there and comes back and says the appraised value is $490,000, we obviously have a $10,000 deficit. Well, there are options other than just walking away, which you wouldn't want to do as a buyer in this market. So option one, in the best case scenario for the buyer, is the seller agrees to reduce the purchase price from $500,000 to $490,000. Seller might not want to do that. So option two would be that the buyer could come in with that additional $10,000 to meet that deficit. But clearly, if you're a buyer that's not putting a lot of money down, that $10,000 might be hard to come up with. Option three, which I see quite a bit, is that there's a negotiation that takes place between the buyer and seller where the seller will reduce their purchase price by a certain amount and then the buyer will come up with a certain amount. So keep those options in mind, as well as talk to your lender or realtor if this happens to you, and reach out to me with questions, of course. As always, my motto is to take the fear out of the home loan process through communication and education, and let's make it a great day.